This video I'm going to be talking about time-based liquidity, and the question is, what are time-based liquidities? Time-based liquidities are just price areas that pairs up with specific time of day or time of the month or time of the week. All right, why this type particularly matters is because that's where smart money hunts for, because most traders places their stop below this particular area, especially subconsciously, or when you're in a buy position or in a sell position, price does not reach in for your structural liquidity. I keep wondering what actually happened. Maybe you have a bullish structure and then you're targeting this buy side. Meanwhile, there's a time-based liquidity sitting right before your external range liquidity. What majorly happens is price goes to this area, grabs this liquidity, and then reverses on you. The idea of time-based liquidity is going to help you narrow your idea about liquidity and help you secure early profits and enter at affordable prices. All right, the core examples of time-based liquidity we popularly know are session highs and session lows. We have the Asia session, we have the London session, and we have the New York session. These are the popular areas of price. Now, how can we navigate price using this particular session highs and session lows? All right, the three core areas are: we have the Asia high, we have the Asia low. They serve as entry triggers and also serve as exit triggers. Similarly for the London and for the New York. All right, majorly the Asia high and Asia low are very weak, and the London areas are usually a big liquidity pool for New York to actually tag from. Moving on, now we're talking about types of time-based liquidities. We have the intraday liquidity. Time-based liquidity, we have the intraday liquidity, known as our session highs and session lows. Session highs and session lows, like the Asia highs and low. We have the London highs and low, and we have the New York highs and lows. Also, we also have our daily liquidity. These are our intraday liquidity. Pardon my drawing. Intraday liquidity. These are liquidity you see on a day-to-day basis. And then we have our daily level liquidity. These are our previous daily high and previous daily low. Also, we have the daily time frame fair value gap. And these are big drivers of price on the higher time frame. Meaning, if you're looking to buy, if you're coming to a new day on price action, meaning you're coming, maybe today is Wednesday, and you're looking to trade this particular day, how do you go about it? The first question you ask yourself was yesterday bullish on Tuesday? What price action played out on Tuesday? And what price action is playing out presently today? If yesterday closed as a very clean bullish candle, what we'll be looking for on the new day, you're looking for Wednesday to actually trade into previous daily high. It will serve as your easy target for taking good clean trades. Now, it also moves down up into the weekly levels and the monthly levels. All right, they act as strong magnets to pull price together. Now let's run through how we can use it on our day-to-day basis on the charts. So we're talking about the daily time frame, previous daily high and previous daily low, pairing up with the fair value gap. Now looking at this price leg, all right, to easily determine the direction of the market, we look for where price is at and where price is likely going to draw into. So you look at the daily time frame from the left, you can notice price drove into this daily time frame fair value gap. All right, what we can expect is, because of the rejection price has that fair value gap, we can look to target the previous daily high on the coming day. Moving forward, price then tags this previous daily high. Moving forward, yesterday gave us a bullish candle. What can we look for? The new day, we can look for price to trade into the previous daily high. Now, price traded into the previous daily high, but with a strong rejection. That can also mean footprint for a possible retracement. All right, so automatically out of the box, I'll not just be targeting this high outrightly. I'll look for price to actually cool off because of this rejection. Now, compared to this first candle that closed strong, look at the way this candle closed. What I can say is, because of that rejection, I'd like to see how the next day trades. Now, anytime we have price action that trades in the range of the expansion candle, meaning we have a bullish candle, but then the next day does not trade either to the high or to the low, we mark out the highs and low of the expansion, and we will not look to engage into price. The price sweeps one side of the price, and then we look to target the opposite side, more like the accumulation, manipulation, and distribution profile. Moving forward, price as well did not still trade into this range. So if you're looking to trade in between these days, you just see yourself taking reckless losses. All right. Then we look for price to hunt one side of the expansion candle, our initial range. So moving forward, you can see price what traded to the low of this candle with strong words, with strong rejection. So what can we say we are looking for in price? We're looking for price to trade into higher prices. Also to that, we can also see price drove into what this fair value gap range with strong rejection. We can say I want to use this area as my open to enter my long trades, to enter my buy trades, and target into buy side liquidity. So a trade is possibly already triggered, but then I've already taken one side of the pool of liquidity and look for price to target into opposing range. And price has already targeted those areas. Moving forward, because of the way this candlestick closes, we're still looking for price to go bullish, but then price closed above this previous range. Looking for price to actually target those areas easily. We have those strong rejection, retracement into what? Another daily time frame fair value gap. Because of the way this bullish candle closed, what can we say? We can say price did not close out the very best for a bullish candle. But price drove into this daily time frame fair value gap. And we're in a bullish trend. What should we see? We should see price trade up into those highs. We have this bullish candle. And of course, we knew that we're going to be trading into the previous daily high. Not trying to oppose the obvious trend. Bullish candle as well. I'll still be looking for continuation into buy side liquidity. So I find a candlestick that does not close out at its best. All right, we have those rejection into this range, into this gap. What can we see? What can we anticipate? As always, look to trade up into those highs. So I've already explained the concept behind the daily time frame levels. Now let's talk about the session time frames. Now we have the start of what? Asia. Now, since we know we're in a bullish market, what I can look for is for price to hunt Asia's low first before continuing the uptrend. Meaning, I want to see price take out maybe the last Asia's low before I even hunt for this high. First thing first. We have that. Okay, then this becomes my what? My Asia's low. But then as always have your key levels that you possibly want to buy from. Clearing range. London starts, takes out Asia's low, and that same hour candle delivering towards external range liquidity. Then, at the back of my mind, I'll just look for New York to trade into 50% of the London range before continuing higher. Trades into what? 50% range of the London session before trading higher. It's about understanding the idea behind accumulation, manipulation at this low, and then we have our expansion. Price does not always tend to expand. Look for price to cool off around New York, at the start of New York, for looking to seek higher prices. I hope you understand the knowledge behind what both the daily time frame level, I have the idea behind what the previous daily high and previous daily low, and the daily fair value gap. I have the idea behind session highs and session low. Very simple and basic video. I think I'll see you guys on the next one. Bosh.